All right, so let's begin the week with our segment, Meet Your Fund Manager, where today we won't be meeting a fund manager but a CIO, and we'll be discussing about their strategy ahead after the election mandate and what's the momentum with the market and any sector-specific calls or bets that investors should be taking. Let's call upon Mihir Vora, CIO at Trust Mutual Fund. Mihir, good evening, and thank you so much for joining in today on the show. All right, so a lot of house views that we are seeing as per reports and the news flow, but then as far as Trust Mutual Fund is concerned, how do you look at it, the election mandate?
Hi, Kavita. Thanks for inviting me. Uh, the good part is that the election has voted for continuity, so there is no change in the ruling regime. So that's a big positive because what the market and the economy was expecting is continuation of the growth policies for various segments that the earlier government had been working on. So with stability and no change in regime, I don't think there is going to be any change in the thrust toward all the sectors that we have been focused on in terms of PLI schemes, in terms of Atmanirbharta, in terms of indigenization of production. So all those things are likely to continue, which is a big positive. Of course, the majority is a little bit reduced compared to before, but there is no threat to the stability as of now. So I think continuity and growth focus are the big positives that I would take away from the election, which means that, in terms of the portfolio positioning, etc., apart from some minor tweaks, I don't think we need to change any dramatic view on the portfolio.
So, Mihir, I also wanted to understand now, since you're expecting policy continuity and the thrust will be obviously on growth and more economy-facing sectors. So, consumption theme is one where everyone is just talking about. A lot of boost and a lot of hopes out there. Are you also putting thrust on this particular sector, which is like an addition to the existing sector list that you had even before the elections?
Certainly. So, sorry. Certainly. What was happening is in the last couple of years post COVID, the consumption recovery was a bit one-sided. So while we saw the markets booming and while we saw GDP growth, it was to some extent lopsided in favor of the higher end income levels. So we have seen in the last couple of years post-COVID recovery that the growth in the income levels of the higher categories was much better, and the recovery in the higher income categories was much better, probably because the organized sector could bounce back much faster compared to the unorganized and the rural sector. So all the segments which were catering in consumption to the premium end, for example, the more expensive cars, SUVs, the more expensive bikes, bigger size houses, premium houses compared to affordable housing. You can say hotels, travel, tourism. All those where discretionary income and higher income categories were spending recovered much faster, and the lower end consumption was recovering much slower than before. So to that extent, we could see that the distress or the recovery in the lower income categories, both urban poor as well as the rural poor, was much slower. However, now we are almost 2 to 3 years after COVID, and the rural sector is bouncing back slowly. And with the monsoons around the corner, and probably the election verdict also impacting government decisions, there is a possibility that the government might do far more than before in terms of support to the lowest income categories, which is one of the key messages that probably the election has thrown out. So while we were underweight on the lower ticket consumption like the FMCG segments, etc., which is what we probably will now try to correct and reduce the underweight in those segments and then see how it goes.
Mihir, going ahead, budget is going to be a very crucial event for you and for us as well. What are the key announcements that you are hoping for? Looking at the coalition government, looking at the new structure of this government, what are your budget announcement expectations now?
The good thing is that the budget is now increasingly becoming less and less important in a good way, because a lot of the policy decisions and the GST etc. decisions are outside the budget. So, for example, GST, which is one of the biggest components of tax collections, is decided by the GST Council. So that doesn't have to be in the budget. In terms of personal taxes, corporate taxes, we are pretty much at globally competitive levels, so not much tweaking there to be done. We also simplified the slabs, etc. So in terms of tweaking, etc., there's not much left to be done. So what matters will be, the little bit of readjustment or adjustments that we keep on doing depending on the priorities. Like, for example, as we just discussed, there might be some more socks for affordable housing, for rural housing, for some more subsidies for the rural poor income generation, etc., for farmers, etc. Because we are seeing that this part of the economy probably needs more support. So apart from that, I'm not looking at really major changes either in the capital gains tax regime or any other taxation, because I think we have pretty much streamlined a lot of things now.
Need also a time, for us to pat our retail investors back. I mean, look at the SIP numbers that have come today. Again, 20,000 crore we've crossed in terms of SIP numbers. And also, the influence sector and thematic funds has also reached a new record high. Do you think this momentum is going to go on further?
Certainly. So we've only seen acceleration and incremental additions to the folios as well as the SIP flows. And unless the market really does badly for a long period of time, I don't think that trend will change. And this again, as we discussed, is in line with our theme that the higher income category growth will be significant, which on one hand impacts premium consumption positively, but also is linked to the savings linked part of the financial services. So within financial services, the segments like wealth management, broking, capital markets, insurance distribution, etc., insurance also, asset management, all those segments will grow faster than the rest of the economy and rest of the banking system, because as I said, these cater to the savings part, and the savings in the premium segment and the higher income segment are growing at a rate much higher than the rest of the economy.
Mihir, what part of PSE sector you think will be gaining momentum now going ahead?
You mean public sector?
Right.
Right. So in public sector, it's good that you did not, club the whole bunch together. We look at it sector by sector, stock by stock. So I still think that the PSU banks can continue to do well. Again, asset quality issues are behind us. They are well capitalized and growing almost as much as the private sector, which they were not earlier. So the difference in growth between the private and public sector banks has reduced significantly. So that's one tailwind for the PSU banks. The other ones that I'm positive on are in the engineering and defense and railway link space, where I think the government focus will continue as we discussed. Even in the new regime, so all the stocks in the capital goods segment, defense, railways, etc. segment, should also continue to do well in the PSU space.
All right. Talking about sectors, where do you think you are under and you might just want to increase your exposure going ahead?
Sure. So we are broadly underweight on the globally linked sectors, which includes sectors like IT, materials, metals, energy, and to some extent, as I mentioned, we were also underweight on FMCG and to some extent also on financials, because we were overweight on industrials and physical asset stocks. So we had to take money out from some of the larger sectors like financial. Though I would not like to be underweight on financials completely. So that's something that we'll look to rectify. But the other segment that we talked about, like the global cyclicals, IT services, and to some extent FMCG, we may continue to be underweight, but maybe less than before.
Mihir, what about the mid-cap and small-cap space? How do you look at the valuations now? Has the froth completely gone? Are the valuations now comfortable?
Valuations are certainly comfortable now compared to say a week ago. But I would still say that in the small cap space and the mid cap space, one does need to be very, very choosy about the stocks one gets into, because while they are cheaper than say 10 days ago, they are in some pockets there is still a lot of overvaluation. So I would stick to the stocks where I'm more comfortable with in terms of the growth prospects and of course the valuations. So I would say in terms of the number of stocks which I would like, not much has changed in 10 days, frankly speaking, even after the correction. So we are more or less sticking to the same bunch of stocks that we have. Having said that, in our flexi cap portfolio, we have almost 40% exposure to mid and small caps, which is a decent amount, which only shows that the universe of stocks to choose from in the small and mid cap space is much bigger in terms of number of stocks, and there is always choice available.
Sure. Also, looking at rejigging your portfolio, reshuffling your portfolio, time to reduce exposure in mid-cap on the financial portfolio point of view also for an investor. Obviously, it depends on the time horizon that you have decided for your portfolio. But just in case you're seeing profits, it's better to shift towards large cap. We've been discussing this since a very long time now, though.
No, I don't think so, because at least from our point of view, we have done the stock picking based on certain assumptions. And because there is continuity of regime and we expect the policies to continue, those assumptions more or less still hold. So we are not changing much, frankly, on our side. And I would say neither should the investors, unless something has changed in the particular stock that they are holding.
That will be all today on the show. Thank you so much for talking to us today, Mihir, and giving us an overview of what's the House view on the election mandate and your strategies going ahead. Thank you so much.
If you like this video, then like, share and subscribe to ET Now.